Hello, this is Dan Wiener, Chairman of Advisor Investments, with another Advisor You Can Talk to podcast. I'm here with Jeff DeMaso, Advisor Investments Director of Research, and we've been talking over the past few weeks about a topic that seems to come up from time to time, and we thought was particularly relevant given the stock market's decline in October. Jeff and I were talking about the question of what's your number? Not your retirement number, but the number or the size of the loss in your portfolio that can keep you up at night, right, Jeff?
No, that's right. And I guess the very first thing that should be said is if you are staying up at night because of your portfolio declines, you're probably taking on too more risk. And that's the number one sign that you need to revisit how your portfolio is positioned.
Yeah, we often talk about volatility. Volatility goes two ways, right? I mean, there's volatility to the upside, there's volatility to the downside. Um, but when investors talk about their number, uh, in fact, not the retirement number, but how much money are you actually losing in your portfolio when the stock market's going down? I mean, if you start with $1 million portfolio, for instance, in October, that 7% decline, that was $70,000. That left you with closer to $900,000 in your portfolio than the million you started out with, right?
No, that's right. And I mean, you can take it a step further and try and run through some more examples just to think about when you're looking at your portfolio before drops. But we've done some research that says that in the average year, the S&P 500 drops 14% during that year. So a 14% decline on that $1 million portfolio, that means you're down 140,000 or you're left with a portfolio of 860,000. Bear market, that draw line in the sand's drawn at 20%. Again, on that $1 million portfolio, that's a loss of 200,000. So you're down to $800,000 in your portfolio. And we found that when you have a bear market, the average decline is actually 35%. So that's a $350,000 loss, and your portfolio would be at $650,000.
That's more than a third of my money disappearing in a bear market, right?
It is, but you say disappear, and it really only becomes a permanent loss if you sell and lock in those declines. We know over time that the market tends to rebound and go up over time. But at the same time, as I said, use these as expectations. If those declines sound too much for you, then you need to think about reducing risk and buying bonds or cash.
It's often been said that people tend to focus on the percentages when assets are going up and they focus on dollar amounts when they're going down. Why do you think that is?
Well, I think the first thing is loss aversion is a really strong emotion. And so loss aversion is the idea that we feel pain or the decline in our portfolios twice as much as we do in the as good as we do when we see those gains.
And then you look at those dollar amounts, and October's 7% decline on my $1 million portfolio, that's $70,000. Retirees in particular who aren't earning income, they can be thinking of these dollar amounts in terms of other units, right? $70,000 might be a year's rent. It might be the equivalent of two or three cars. It could be many years worth of golf club dues. We tend to see a number. I think a lot of investors or people in general see a number and equate it with something they're familiar with in their life.
They do. And particularly now that we've been 10 years into a bull market and your portfolio is probably much bigger today than it was 8, 9, 10 years ago, those losses, those declines are going to translate into even bigger numbers. So for some people, that's going to be an emotional problem. 10 years ago, maybe your portfolio was $1 million, a 20% decline is a $200,000 drop. Maybe today your portfolio is at 5 million, where a 20% decline means you're down $1 million. Your portfolio just dropped $1 million. That can be really tough to see.
But that $200,000 decline that looks so big when you had $1 million, I mean, that would be a 4% loss today on a $5 million portfolio.
Absolutely. And you could also spin this around and look at it the other way. Maybe your portfolio is bigger today than it was, and that gives you a bigger cushion. Maybe you're sitting there and saying, whoa, I still have $4 million. That's pretty good.
Right. Even after a 20% decline, or the other way to put it is after $1 million decline, you've still got $4 million.
Yeah. And look, at the end of the day, if a number or a loss is keeping you up at night, you do have to respect that and think about that when you're building your portfolio. But rather than focus on the number, we try and focus on your broader financial planning questions of what are your needs, what are your goals, how do those compare to your income and your overall portfolio. And a key point here is that it's an ongoing conversation. It's not a one and done, "Yeah, this is my number and that's what it's going to be forever." Things evolve as you go through life.
And the markets do too. I mean, that's why it's very important, I think, to both understand how numbers and percentages change over time, but also I think you made the point when we were discussing this earlier that maybe it's best if you don't focus on that number too much.
Absolutely. I'm not a fan of really having a number, whether it's a number that you've got to retire at or the number on the decline. We do try and think in percentages, your portfolio holistically, your goals holistically. And, declines always feel scary in the moment, but in the past, each decline has been an opportunity. So we try and focus on that going forward as well.
And I think, the point here that you've made about financial planning being an ongoing conversation about where you're at, where your spending is at, where your savings and your investing is at, that's really important. That's really the bottom line, isn't it?
It is.
Jeff DeMaso, Advisor Investments, Director of Research, thanks for taking the time today. And I'm Dan Wiener, Chairman of Advisor Investments. Thank you for taking time today to listen to another of our Advisor You Can Talk to podcasts.